Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs, counting you down to the closing bell, here to help take us beyond the bell. It's our global simulcast. We're joined right now by Peloton aficionado Tim Stenovec and Kriti Gupta filling in for Carol Massar, of course, taking another day off here, bringing together our Bloomberg Radio, TV, and YouTube audience. Going to parse these crucial moments of the day. And the crucial moment of the day, Tim, really, I guess, had to be around 10 a.m. when we got those headlines out of that speech by none other than Mr. Jerome Powell.
Yeah, it was the moment we've all been waiting for, and equity investors were certainly happy with what they heard, sending shares of stocks higher. A broad-based rally is what we're seeing today, and if the S&P 500 is right now looking like it is going to close at a record, only 67 stocks in the S&P 500 are lower out of the more than 505. Yes, more than 500, I should say. Yes, it is more than 500 in the S&P 500.
Good old two Googles, for example.
Exactly. Yeah. Thanks for those dual share class, right?
Well, you know what's interesting here, Tim, is you are seeing a lot of this come on the back of the FOMC minutes last week. Last week, this was a non-reaction. You didn't see that major stock boost. Stocks actually dropped a little bit on that tapering, a little bit on risk sentiment, but you didn't see the market really accept the fact that tapering would start at the end of December. But this, to me, is the definition of pricing in, Caroline, because now we really had Chairman Powell come up and confirm what the market knew last week.
But the market perhaps had worried he would go further. They'd worried that the inflation numbers that we'd seen, the strength of the rebound, the labor data would mean maybe we'd see tapering even sooner, as soon as fall. Maybe that would immediately mean some sort of repercussion in terms of rate hikes. But no, he separates the two, and very much seeing that Vice Chair Clarida echoing that thought just after him.
All right, well, put your eyes here on the screen for our television audience, for our radio audience. Perk up your ears right now. If you like nice round numbers, 4,500 on the S&P 500. This is going to be the first close above 4,500, and of course that means that is a record high. 4,509 is a rate for these numbers to settle. That's going to be up about 39 points. 0.9% here. The NASDAQ composite also higher here at a record high, up about 1.2%, 183 points. The Dow Jones getting in on the action, as Taylor pointed out, still a far away, a ways from its record high, but up 241 points. A pretty solid day here, 0.7%. The outperformer on the day really belongs to the Russell 2000. We talked a lot earlier this week about how the Russell 2000 and that outperformance had actually started to wane. It had put together 4 straight days of outperformance, reclaiming that again, and on a weekly basis, really outperforming the S&P and the Dow, up 3% here on the day. The Russell 2000, of course, still has a ways to get back to that record high, but again, up about 5% or so on the week.
Yeah, but a solid week for all of the indices, all the major indices. The Dow finishing the week higher by more than 0.9%. The S&P 500 higher by more than 1.5%, Taylor. The NASDAQ coming in just in the last 5 days by more than 2.8%.
And you really see this broad-based rally for our radio audience when we take a look at the individual sectors. As we do every day, it's the winners and the losers, and it is all green, even in the losers. That's really how it shows you the broad-based commitment to this market. Let's start with energy. You're up 2.6%. Crude just had its best week going back since June of 2020, up about 10%. And then, of course, it gets a little techie, right? With bond yields falling, semiconductors, media, some of the insurance companies, you're up 1.4 to 2% on the day. I'll migrate down here to some of the underperformers, though they are still green on the screen. It's utilities, it's household and products, it's food and staples. It's some of those safe havens that investors today, Kriti, they didn't need.
Well, Taylor, you know, on a day where there are so many broad gains, it's hard to pick out individual gainers. But I'm going to take a stab at it. Let's start with Exxon here, because this is crucial. Hurricane Ida bearing down on the Gulf, cutting some of that output, boosting potentially some of that supply. So Exxon, that largest oil producer, going to be really crucial here. Ford also, Rivian is the EV maker that they're backing, now filing for an IPO. So you are seeing Ford kind of ramp up and outperform some of its peers on that news. Our Ed Ludlow leading that coverage. And NVIDIA extending its own rally after its data center growth stays strong. An upgrade over at Argus Research. Some good news for that semiconductor company. Tim?
All right, well, I got to make good on my promise of being a Peloton aficionado, at least according to Romaine. I don't have one, though, Romaine. I actually don't have a Peloton.
Oh.
Finishing the day
they've
down.
Gotten cheaper.
Yeah, $400 cheaper, and perhaps that's one of the reasons why you're seeing the stock slide today, down more than 8.5%. Look, we talked about about this over the last 24 hours a lot. A sales outlook for the current quarter that came in below expectations, issues with tracking inventory, cutting the price of the bike by $400. But then this morning, the company coming out and saying it's been subpoenaed by the Department of Justice, Department of Homeland Security over injuries from products. The SEC also investigating the company's disclosures. Peloton co-founder and CEO John Foley, though, was asked about this and other things by Bloomberg's Emily Chang a little earlier in the day. He did say he's proud to offer the bike for less. He said that it's not something just for rich people. This is something that is for everybody. Dell Technologies is also another one that I'm keeping an eye on, down by more than 4.5%. Revenue and profit did top analyst estimates.
Is that just for rich people too? Or is that for everyone?
Well, you know, it's interesting. We talked to Matt Baker, Chief Strategy Officer at Dell Technologies, earlier today, Romaine, on our show, and he said he's not at all concerned by people, perhaps hardware sales peaking for PCs, for laptops. Yeah. He says that we're in an environment now where people need multiple devices, multiple computers. I push back on that a little bit because, you know, we do have the companies that want to come out with the one device that actually, fills exactly. Well, they're also moving more into services too, as every hardware company is. Is that going to
cost me more too?
It is. You got to pay monthly for that, right? And finally, DoorDash lower. We got a lot of news from DoorDash in the last 24 hours, or at least about legislation potentially affecting the company, specifically here in New York City about capping those delivery fees, Caroline.
Good to single out some of those key companies on the downward trajectory. What's on the downward trajectory in FX? It's the dollar. King dollar no more at the moment. The reaction to Fed Chair Powell, of course, dollar index off by 0.5%. What rallies commodity-related currencies? We've got the Norwegian kroner outperformer up 1.5%. This is as we see Brent crude up 2.2%. $72 is where we trade. We see movement up in oil. In fact, oil having its best week since November, since earlier, of course, the entirety of this year. Of course, not all good news if you're certainly living over in New Orleans. You're worried about the new Hurricane Ida coming your direction on the 16th year exactly that Hurricane Katrina made landfall. Just such a painful date. But we're seeing steel get a bid up 1.5%. Commodities liked what came out of Fed Chair Powell. They like also perhaps what's coming out in terms of the growth hopes. We're seeing, though, across the board, a movement into bonds, no matter where you were in the world. Canada or Norway, UK yields coming down some 2 basis points in the UK as well, Taylor.
And we answered the age-old question, Caroline. How do bond yields fall when we taper, right? Take a look at 2s, 10s, and 30s. You're down 3 to 5 basis points on the day at a 131 on the 10-year, a 191 on the 30 years. Really interesting. All of this conversation started at 6 a.m. this morning. Jim Caron, of course, is the fixed income portfolio manager for Morgan Stanley Investment Management. Take a listen to what he had to say about bond yields falling.
If the Fed starts a tapering process too soon and becomes too aggressive and maybe starts to hike rates too much too soon, then the economy will not grow as fast and the Fed will not be able to hike rates enough to get to its expected terminal target of 2.5% policy rates in the future by, say, the end of 2025. And that might only get us to about a 2% terminal rate. What that tells us then is that fair value for the 10-year Treasury, if that's the case, if the Fed hikes rates too soon, is closer to 1.3%.
Again, Jim Caron there, of course, of Morgan Stanley. And Tim, I think what is so fascinating is it goes counterintuitive to some of the traditional arguments of it's a taper, yields are rising, we're not buying as many bonds. But it impacts the growth of if you want to reach that 2.5 terminal Fed funds rate by 2025, let's say, how much of that is going to slow growth where you can't get there? Jim Caron nailed it this morning.
Yeah, he certainly did. And this is something, look, that I think that Jay Powell made clear in his speech today, that the Federal Reserve has the tools to adjust, whether it's dependent on data from employment numbers that we get next week for the month of August. Yes, it's already that time again. Or whether it's about data when it comes to the Delta variant and the spread of the Delta variant. I have to say I was particularly surprised not to hear him talk more about the Delta variant. In that speech this morning, by my count, he only mentioned the word Delta 3 times. Given that he was delivering the speech virtually as a result of the spread of the Delta variant.
Well, I mean, let's go. I want to go back to what Taylor's point is, because I mean, the drop in yields, this is confounding to me. Because if you are now talking about 2024, 2025, before we can even get there, the fact that he didn't have a big discussion about Delta, that factors in. The fact that he didn't make a whole lot of comments about the further fiscal stimulus, that has to factor in there. And you wonder at some point that if they are truly going to de-link the process of tapering with the process of raising rates, are they ever really going to get to that point where they can start raising rates? I mean, does the economic cycle eventually overtake them?
But of course, this is why the punch bowl keeps on going and why everything rallies, because everyone hopes
punch
that
bowl?
Yeah, well,
yeah, okay.
Well, what more is it now?
Well,
It's like
you know what? We just had Mark Travis, president and CEO of Intrepid Capital. He called it the morphine drip of QE.
Yeah, thank you. See,
continuing.
I said that.
Morphine drip.
A syringe.
Yeah, it's a syringe.
I think punch bowl sounds more Friday feeling to me to a certain extent. But
let's have some punch.
But this is why we're seeing an everything rally. This is why we're managing to de-link the two. But the question mark for the market is whether whenever you start to see rate hikes happening in the United States.
Kriti, you were watching
Caroline,
the knee-jerk reaction earlier today. What did that tell you?
Well, you know what's interesting to me is that we've been talking about the labor market, we've been talking about the Delta variant, we haven't necessarily been talking about inflation because we've all assumed that the Fed thinks it's transitory. They don't care. But Cameron Kreis, our colleague over on MLive, he quantified it, 203 words in the speech on the employment outlook, 1,059 on inflation. If inflation isn't a concern for the Fed, why waste 1,000 words on it?
Did he ever say transitory?
He did not in this speech.
And everyone had these drinking games going, drink every time there's a transitory. I don't think he gave it to us once.
The word inflation. For having to drink from the punch bowl on that one, because that was more than 80 times by my count.
And now we're setting up for this deluge of data kind of come out next week. Of course, obviously the employment report, but we get these global PMI numbers and a lot of other sort of data that I think will give us a better read, not only on the economic growth, but it will sort of maybe feed into the idea of where the inflation is and whether it is as sticky as maybe some people in the market think.
Tim, just quickly, UBS already out with their forecast, 1.1 million jobs on Friday.
Oh, that's going to be a big one if that indeed comes true. All right, we'll bring it to you live, of course, on Friday. In the meantime, we're going to be doing much more of this, but taking a quick break, of course, for the weekend. That will do it for our cross-platform coverage here on Bloomberg Television, Bloomberg Radio, and on YouTube. Everyone have a great weekend. We will see you all on Monday.